startup ecosystem, the Government of India announced some new rules for small companies. Now, the government has redefined what a small company is in terms of capital and sales, bringing in more companies under the fold of the small enterprise category. Now, enter business with a sales of rupees 40 crore and below and a paid-up capital of rupees 4 crore and below is considered a small enterprise. Now, these thresholds are higher than the earlier ones of rupees 20 crore for sales and rupees 2 crore for paid-up capital. Now, this move was to essentially make easier reporting and compliance norms, which will now be available to a broader segment of India Inc. Here's how it will benefit the companies. Now, businesses that enter to the Small Companies Club are exempt from preparing a cash flow statement, which is required for larger organizations. Now, these companies will only be needed to hold 2 board meetings per year. Also, no mandatory auditor is needed. Furthermore, the penalties for late compliance of certain norms will be less severe. The recent move is a part of the government's effort to make doing business easier and lowering the cost for firms, particularly the small-sized ones. Now, broadly speaking, such gradual efforts would have a beneficial impact on the Indian startup ecosystem and help it expand further. To keep the value of the dollar under 80 rupees, RBI has been selling dollars and buying rupees. Now, but of course, this comes at the cost of falling foreign exchange reserves for the country. Now, foreign exchange reserves seem very complex, but they're essentially assets held by the central bank in foreign currencies. Now, holding them in adequate quantities is important, especially for an import-dependent country like India to tackle economic challenges. Now, India's foreign exchange reserves dropped by $2.233 billion to $550.871 billion for the week ended September 9th, the lowest in 2 years. Now, this is the 6th weekly fall in the country's forex reserves. Now, when compared to previous 10 years, this depletion is likely the sharpest India has ever seen. There were instances of India's forex reserves dwindling in 2011, 2012, 2013, 2018, but there were minor declines. However, India is not the only country to face the challenges of a stronger dollar. Emerging Asian countries have also seen a sharp depletion in their foreign exchange reserves, as seen on the chart on your screen. Now, according to Standard Chartered, India has enough reserves to cover for about 9 months of imports, 6 months for Indonesia, 8 for Philippines, and 7 for South Korea. Now, given the volatile global backdrop, there will be fluctuations in respect to foreign exchange reserves. As of now, the fall in reserves for India is not alarming, as we still have adequate reserve cushion to fight any external challenges. Another sign of economic recovery in the country has been the jump in the direct tax collections to the government. The direct tax collections continues to grow at a robust pace so far in fiscal year 23. The government's gross tax collection showed a 30% year-over-year jump to 8.36 trillion rupees for the current fiscal till September 17. While net direct tax collections, which excludes refunds, stood at rupees 7.01 lakh crore, showing a 23% rise year-over-year. Now, the surge in collections can be attributed to higher compliances and plugging of leakages. It also indicates that Indian economy is on track. So, what does these news mean for you? We believe the government tweaking rules for small companies is a positive amendment towards ease of doing business. This will have an indirect positive impact on you. Even while our foreign exchange reserves have been on a downward trend, India has adequate foreign exchange reserves to combat any external shocks. This will have an indirect neutral impact on you. The efforts at nudging taxpayers to better compliance are paying off, and tax collections is expected to continue on the upward trajectory. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.